A lot of the world already understands it. I get it. I think you get it. Maybe some of your listeners do. But a lot of people out there have no idea. And they look about becoming wealthy by buying silver and becoming wealthy by buying gold in this reset environment. And that's the wrong way to look at it, in my opinion. Yeah, you might be wealthy if you own enough of it, but it is wealth that has outlived everything the world has ever thrown its way. 2 world wars, German hyperinflation, the Great Depression, every pandemic, every amount of crap that's ever been thrown at gold and silver. And here we are today. The biggest, smartest money in the world has bought more the first quarter of 2024 than ever before. That should be enough for people to understand the bigger picture. What I am saying is we are entering a period of great transition, of great uncertainty and fluidity. And for my money, I'd rather gamble on something that's been considered wealth since the Bible.
AndySchectman, CEO of Miles Franklin, delves into the intricate question of wealth preservation, highlighting the complex and subjective nature of the decision-making process. Despite the myriad options available, Schectman emphasizes the enduring appeal of assets with a proven track record, such as gold, which instills a sense of security in uncertain times. Against this backdrop, Tuesday's stable gold price of $2,330 underscores its role as a safe haven asset amid ongoing geopolitical risks. The shifting dynamics in international trade, particularly the BRICS nations' move away from the US dollar, have bolstered demand for gold as a potential alternative medium of exchange. According to Schectman, central banks' significant increase in gold reserves in recent years signals the enduring allure of gold as a store of value. The Carnegie Endowment for International Peace echoes this sentiment, suggesting that gold could serve as a substitute for the US dollar in international trade, especially among nations with volatile domestic currencies. While cryptocurrencies like Bitcoin have garnered attention, Schectman notes that they have yet to witness the same level of adoption by central banks as hard commodities like gold. Moreover, strategic acquisitions of gold, silver, and other commodities by countries like China reflect a recognition of their intrinsic value amidst a shifting economic landscape. The first quarter saw notable increases in gold purchases in Asian markets, with China, India, and Singapore leading the way. These purchases, encompassing central bank acquisitions and retail transactions, underscore the region's growing appetite for precious metals as a hedge against economic uncertainties. Join us as we delve into Andy Schectman's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I would feel much more comfortable holding something that has been considered value for 5,000 years. And if you look right now, in 2023, the first quarter, well, first of all, you go back last 3 years, the central banks have bought more gold than any time in history. The first quarter of 2023, they bought more gold than at any first quarter in history. Well, those numbers were just better this year, 2024 first quarter. So when you have the most well-informed traders in the world, forget about they're the wealthiest, but the most well-informed traders in the world, they understand what gold is and they're buying it. And so, yes, it's been money for 5,000 years and it still is today. And when the most influential and well-funded players on the planet are buying the world's, in essence, only other tier one asset other than US dollars, it should tell you have a fighting chance when others will have virtually none. And being in dollars is the quickest way to go broke in that event. So I don't know what happens, but I would say I'd rather take my chances with that than just about anything. And people will say, well, what about Bitcoin? Look, I'm not a Bitcoin hater at all. In fact, I speak on, with Mark Moss and Natalie Burnell. These are two very big Bitcoin people. I'm on with several of the XRP channels, 3 or 4 of them. And I legitimize and understand cryptocurrencies well enough to understand that, that I should own some. But the central banks aren't gobbling them up the way that they are hard commodities. Look at the Chinese, for example. Not only are they buying up all the gold and silver globally, they just bought the London Metals Exchange, which is the base metals that are traded across the globe: copper, tin, zinc, lead. They're striking deals all around the world in Africa and South America, mostly building oil refineries and gold and silver mines and bridges and roads and railways and maritime channels and anything to get rare earths and any of these commodities out of the ground. And they're doing it on the Belt Road Initiative, trying to do it in a cooperative manner because they understand, as Zoltan Pozsar says, this is a system we are moving to one that will be all about commodities, not opaque debt instruments. So I would take my chances with, wealth in the form that you can hold in your own possession with no counterparty liability. If I had to guess, if someone said what will be one of the dirtiest phrases that you could hear over the next several months and years, it would be counterparty liability, counterparty risk. Because everyone is leveraged and undercapitalized. And so you're going to see, like with the banks, a lot of risk. Most of the people out there have no idea what bank bail-ins are. And that's again, our media doesn't do a bad job. They do no job. What is a bail-in? What is the Dodd-Frank Act? Google Dodd-Frank Act and bail-in, and you'll understand that bailouts were made illegal. And so all of these banks that have failed have been gobbled up or consolidated by JP Morgan and some of the bigger banks, taking and scooping up the cheap assets. But if there's a big bank failure or a series of them, which I suspect there will be, you will see bank bail-ins, which basically says that anything over the FDIC limit is bailed in to make the bank whole. You are an unsecured creditor of the bank, and anything over that amount you will get in shares of a bank within 4 years. You can't buy food or pay your rent with those shares. You'd have to sell them, as would everyone, which would drive the price down. And the point of it is that FDIC is a joke. FDIC has 128 billion in assets backing 18 trillion in deposits. It's a joke. And so there are a lot of things out there that could very quickly change the whole narrative about what commodities are, what counterparty risk are, what gold and silver are. A lot of the world already understands it. I get it. I think you get it. Maybe some of your listeners do. But a lot of people out there have no idea, and they look about becoming wealthy by buying silver and becoming wealthy by buying gold in this reset environment. And that's the wrong way to look at it, in my opinion. Yeah, you might be wealthy if you own enough of it, but it is wealth that has outlived everything the world has ever thrown its way. 2 world wars, German hyperinflation, the Great Depression, every pandemic, and every amount of crap that's ever been thrown at gold and silver. And here we are today. The biggest, smartest money in the world has bought more the first quarter of 2024 than ever before. That should be enough for people to understand the bigger picture.
AndySchectman, CEO of Miles Franklin, illuminates the geopolitical complexities impacting financial markets, emphasizing recent U.S. government actions regarding Russian forex reserves and China's involvement in Ukraine. Such events, Schectman notes, erode trust in traditional systems, heightening the appeal of gold as a safe haven asset. As the BRICS alliance seeks to bolster its strength in 2024, North Korea emerges as a potential candidate to join the fight against the U.S. dollar's dominance. The nation's interactions with BRICS founders Russia and China and its strained relationship with the West position it favorably for potential membership. Schectman suggests that amid these geopolitical tensions, gold's intrinsic qualities, including its lack of counterparty liability and immunity to confiscation or sanctions, render it particularly attractive to investors. Highlighting gold's consistent outperformance, Schectman underscores its superiority over bonds and the S&P 500, even on an annualized basis with dividends reinvested. Over 15-year periods, gold has historically outperformed both stocks and bonds, further solidifying its status as a reliable investment option amid market volatility and uncertainty. Let's get back to the interview.
Bleed down or de-dollarization and de-treasurization. It's one of these deals where you can't move so rapidly to cut off your nose to spite your face. By dumping treasuries all at once to accumulate gold, it is counterproductive in every sense of the word. But to do it methodically, that's what we've been seeing. China is down to just over 700 billion in U.S. treasuries from 3 trillion. And their accumulation of gold for 18 straight months, probably much longer than that, and probably much greater than they are telling us. In fact, there's big analyst at Bank of Montreal who says, the numbers that they're giving us are way, way lower. But what I think is happening, as far as I'm concerned anyway, is that gold is becoming the de facto BRICS currency. Even though we are being told that they're going to issue a common settlement currency, one that will be pegged to commodities like gold. First of all, what is gold? What is it? And I think people need to understand that, it's all of the things that we think it is. But as far as the central banks are concerned, it's the only other tier 1 reserve asset in the world. Let me say that one more time. The only other tier 1 reserve asset. Since the end of World War II, the way that central banks look at things was that dollars and treasuries would be tier 1, riskless. If I'm going to lend you $1 million and you give me a briefcase full of $20 bills for the same amount, that's tier 1. That's riskless. If you don't pay me, you don't pay me. I have no concern. So the same thing in terms of central bank parlance would be $1 million worth of gold. So it's now tier 1, elevated from tier 3. When you realize, let's go back to 2000, right? And in 2000, you had gold right around $252. So gold has outperformed the bond market by a massive magnitude. And at the same time, it's even outperformed the S&P 500, even with dividends reinvested. And, in terms of an annual, it's grown by over 9.5% per year compounding. And so you have a situation where not only has gold outperformed the bond market, but it is an asset that has no counterparty liability. It can't be sanctioned. It can't be confiscated by a U.S. government hell-bent on going around the world imposing rules that are okay. What's good for the goose ain't so much for the gander, so to speak, in the respect that here we are, we've given $200 billion to the Ukraine, but Janet Yellen, our brain-dead Treasury Secretary, goes to do an interview. First, she's in Brazil in the backyard of the BRICS, right? And charter member, and says, well, it's not enough for us to sanction the Russian Forex reserves, but we need to confiscate those Forex reserves, the $380+ billion in Forex reserves, and use them to provide weapons to the Ukraine. You got the German chancellor saying the same thing, and they actually voted to confiscate these funds of $5 billion in the United States to give it to the Ukraine, to fight Russia. And then Janet Yellen goes and says in an interview with CNN that, look, China, we understand you're allies with Russia. You can be allies. We're okay with that. Well, thank you, Madam Secretary, for saying who we can and can't be friends with if you're China. If you give them any money to, in effect, aid their war efforts in the Ukraine, not only will we sanction your banks and your companies, but we will sanction Beijing itself. So I guess it's okay for us to give $200 billion to the Ukraine with no congressional oversight. But the minute China wants to give one penny to Russia to aid, well, we're going to sanction them across the board. These types of hypocritical maneuvers have consequences, blowbacks. And that's exactly what you are seeing right now.
The consistent outperformance of gold over bonds and equities further solidifies its position as a reliable investment option, particularly over extended periods. As we navigate these complexities, it prompts us to reflect on the role of gold in our investment strategies and its potential to safeguard wealth in times of uncertainty. What are your thoughts on the role of gold as a hedge against geopolitical risks and market volatility? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.